What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research, so you don't have to. Before we jump in, a quick shout out to 11 Labs for helping make every Stocks by Sat 06 video possible. Their industry-leading voice cloning and text-to-speech technology helps bring these videos to life quickly and professionally. If you'd like to try 11 Labs for yourself, check out my affiliate link in the description below. Full disclosure, I do receive a small commission if you sign up using my link, and every dollar goes right back into growing this channel and building this amazing investing community. Now, let's get into today's topic. Today, we're talking about one of the biggest market-moving events investors need to watch, the upcoming Federal Reserve meeting. Whether you're investing in Nvidia, Palantir, Tesla, Apple, ETFs, or even dividend stocks, what happens at the Fed can have a major impact on your portfolio. Right now, the Federal Reserve is led by Kevin Warsh, and investors are closely watching both the interest rate decision and the language that comes afterward. That's because markets don't just react to what the Fed does, they react to what the Fed signals it might do next. Think of the Federal Reserve as the thermostat for the economy. If inflation starts getting too hot, the Fed can keep rates elevated or even raise them to cool things down. If economic growth starts slowing too much, the Fed can lower rates to encourage borrowing, spending, and investment. The challenge today is that inflation remains stubbornly above the Fed's long-term target, while the labor market continues showing strength. That creates uncertainty about what comes next. Currently, interest rates remain elevated compared to the ultra-low rate environment investors became accustomed to over the last decade. Higher rates increase borrowing costs for consumers and businesses. That means mortgages become more expensive, credit card interest rises, business loans cost more, and companies may slow hiring or expansion plans. Those effects ripple throughout the economy and eventually impact corporate earnings. That's why stock investors care so much about Fed meetings. When rates are high, future earnings become less valuable in today's dollars. Growth companies are often affected the most because much of their valuation is based on profits expected years down the road. That's why AI stocks, semiconductor companies, software firms, and other high-growth names often experience larger swings around Fed announcements. Let's take Nvidia as an example. Nvidia could report incredible earnings and still see its stock price fluctuate if investors suddenly believe rates will stay higher for longer. The same thing can happen with Palantir, AMD, Tesla, Broadcom, or any company whose valuation relies heavily on future growth. That's because Wall Street is constantly repricing risk, future cash flows, and economic expectations based on Fed policy. One mistake many investors make is focusing only on the actual rate decision. In reality, the press conference often matters more. If Kevin Warsh announces no change in rates, but suggests inflation is improving and cuts may eventually be on the table, stocks could rally. On the other hand, if rates stay unchanged, but he sounds concerned about inflation and hints that higher rates may remain necessary, markets could pull back. Same decision, different message, completely different outcome. Investors should also pay attention to bond yields following the meeting. Rising treasury yields often create pressure on growth stocks because investors can earn higher returns from safer assets. Falling yields tend to support risk assets by making stocks relatively more attractive. That's one reason you'll often see major market moves immediately after Fed announcements, even when no rate change occurs. Looking ahead, there are really 3 things investors should monitor. First, what does the Fed say about inflation? Second, what does it say about future rate cuts or hikes? And third, How does it view overall economic growth? Those three answers will likely determine how markets react over the next several weeks. My take is simple. Don't try to predict every headline. Don't panic buy or panic sell based on a single news alert. Listen to the message, watch how markets respond, and focus on your long-term investing plan. Successful investors understand that Fed meetings create short-term volatility, but long-term wealth is built through patience, discipline, and consistency. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your risk, and invest responsibly. If you found value in today's video, hit that like button, subscribe, and share it with another investor. This is Sat with Stocks by Sat 06. No face, just facts in 5. Keep learning, keep investing, keep building. Peace.